Hi, class. How's everyone doing today? Just wanted to give you a quick update on the markets. Monday, we have a company called Chegg reporting its earnings. They're a software company that focuses on online tutoring and textbooks. I think they're likely to benefit in this environment. Later on Monday afternoon, we also get Take-Two Interactive, maker of Grand Theft Auto. One thing I find interesting about Take-Two Interactive relative to other game makers is that they have existing content that they can just update instead of making something brand new, which is a lot more difficult in this environment. Tuesday, we get Twitter earnings, and we'll see how well they'll fare with their biggest user off their platform. Additionally, they may benefit from increased chatter among investors. Later on Tuesday, Masco Corporation, they're a beneficiary of plumbing, bathroom remodeling, etc. Wednesday, Under Armour reports, and they've recently cut a contract with the NFL, which puts some of their other NFL player deals in jeopardy. Later on Wednesday, we also get Uber, cell phone game maker Zigna, as well as iRobot. All of these might be in one way or another a stay-at-home beneficiary as well. And then Thursday, we get Yeti, the maker of fancy coolers and drinkware. And then Thursday afternoon, we also get the Walt Disney Company, which will really be focused on how much have they grown their streaming service over the last 6 to 9 months, and has that momentum continued. Now I just wanted to pivot to a little chat about something I posted to the group, and that was a fact sheet about a mutual fund called Delaware Emerging Markets Fund. The ticker symbol is DEMIX. And the Delaware Fund is a actively managed fund that focuses on, obviously, the emerging markets. One thing the book will talk about is the name rule. If you name your fund something, it has to be at least 80% invested in what it's called. Emerging markets on a large level is considered Brazil, Russia, India, and China. There are other countries that are part of the emerging markets index, but those are the big four. This manager, if you ever want to look up a fund, I suggest starting with the fact sheet because compared to a prospectus, fact sheet's a couple pages, relatively easy to read and understand, and they're pretty uniform in terms of the content that they provide on them. This manager, I've met with personally, the fund manager, as well as members of their staff. It's part of the due diligence I do when I research a manager. I want to know why they're producing alpha, if they're outperforming, and how they're doing it, so I can get a better understanding. This will help me explain to clients, if I own it, what their funds are doing, why they're doing what they're doing. This manager really has been in the top 10% performers for the last 20 years. That's a really impressive result, considering the common narrative in investing is that active management doesn't work and the average manager does not outperform. Well, that can be true with baseball, football, or anything where you're compared, right? Most people don't outperform the average because that's why it is the average, right? So this manager, I believe I've indicated significant skill. They have a process that looks repeatable. They try to find companies that have attractive franchise sustainability and valuations. What's franchise sustainability? Think about something that you believe isn't going away, like Facebook, Google. In China and Brazil and Russia, there might be other companies that are similar. For example, Yandex is the Google of Russia, but they also own the Yelp of Russia, and they also partnered with Uber. So it's the Uber of Russia, Yelp of Russia, as well as the Google of Russia. It's called Yandex. That's a typical holding in this fund. They can also own stuff like Alibaba, which is the Chinese version of Amazon, things like that. So I would encourage you to look at the performance of this manager, see how they're doing, see what areas they're invested in. If you look at what they hold, I can tell you, let's see here, I'm just pulling this up very quickly. Of course, it takes a second to load. I see that you on the first page of the fact sheet, you can see that, relative to their benchmark, and I'll share this screen so you guys can see it. You can see that this manager here is a little underweight China, overweight South Korea, pretty neutral to slight overweight to Taiwan, underweight India, overweight Brazil, overweight Russia. One thing to notice with emerging markets funds is that they're the great majority of the index. 40% of the index is going to be Chinese stocks. One thing I'll say, what's the competitive advantage of this manager? How did they do so well? The manager of the fund is a doctor from China that moved to the US 30 years ago, got his degree, and effectively started a career in investing. The fund also, you'll notice, has a low turnover, meaning they don't change the investments a lot. They don't trade fast. When you're looking at this from a tax perspective, my side of things, that's good because I don't want high turnover, because high turnover shows A, a lack of conviction, and B, higher short-term capital gains, typically. Next, one other thing to point out here is the active share, which means, active share means effectively how active are they? Are they hugging the benchmark, or are they really taking bets against the benchmark? And that high active share is usually a good indicator that they are a truly active manager. You can also scroll down here and see their largest holdings. Taiwan Semiconductor, largest chip maker in the world. Then you have Samsung. I believe this is a Chinese liquor company, is the third one. Fourth one, Reliance Industries. Fifth is SK Hynix, which is one of the largest memory chip makers in the world. Then you have Tencent, which is a Chinese gaming company. So, pretty similar or familiar names for some people. Something to be considered. And then lastly, we can look at performance, either average annual total returns or calendar year returns. Effectively, we can see here that on a 10-year basis, they've beat the benchmark. On a 5-year basis, they beat the benchmark. On a 3-year basis, they beat the benchmark. And then again, on a 1-year basis, they beat the benchmark. And you can also do this year by year. We see that in 2018, they slightly underperformed. The last time they underperformed before that was in 2014. But in 2013, they knocked the lights out. Having an outperformance of 14% against a benchmark of -2, that's pretty strong. So I try to look at the annual performance as well as the calendar year performance, see if there's any hiccups, what was going on in 2014 that caused the underperformance. I might think of stuff to ask the manager when we're meeting, what happened during that year, and, see what they say, right? What did they change? Did they buy and hold? And then when things they bought got cheap, when they got cheaper, did they continue to buy? And then the following year they outperformed? Well, that might be a good sign of conviction, right? Because everyone will go through periods of over and underperformance. So I wanted to end on that note. I thought I'm going to continue to use these updated little video chats with you guys to engage, update content, and just kind of keep everything fresh. Please feel free to comment below. I'll continue to engage with you guys. I love the questions that I've been getting. Please keep them coming. I will say one more thing about a new company I've been researching. When I think about something that will do better than the market, right? What's the point of an investment vehicle and mutual fund, etc.? It's called Immersion Corp. Ticker symbol is IMMR. And maybe I'll hold off on talking about them in great detail until next week, but maybe you guys can tell me, look up Immersion Corp, IMMR, and tell me what you think about it. I am pretty bullish on the idea, but I'd love to hear your opinions first, right, before I tell you why I like it. Anyway, guys, I hope you're having a great week and looking forward to connecting with you guys.